Hey, everybody, good morning. I know it's early here in California, but everywhere else, it's kind of already, the day's already started, especially on the East Coast. I thought that I would do a really interesting show today. It's all about investments and taking care of yourself and how to invest. I'm going to be talking to two authors. The first one is Julie Jason. The book is called Retire Securely. The next one is called Invested, Danielle Town, and it's going to be a full hour of talking about money, what to do with it, what not to do with it, what to do if you haven't saved, and how to get yourself prepared. So, first up today is going to be Julie Jason. She's the author of Retire Securely. She's also done several books, a retirement survival guide. Oh gosh, let's see. How to make smart financial decisions in good times and bad. All kinds of books, and she's going to be joining us here in a few minutes. And I hope to get some really important information from her. So let's see if Julie is on the line with us. Julie, are you there?
I'm here. I'm here.
Well,
Hi,
good
good morning.
morning, Julie. How are you this morning?
Well, I'm very good, but here it's about 8:30, and it's very early over there, right?
Yes,
Where
it's
you are.
very early over here, but I tell you what, it's
Uh-huh.
never too early to start talking about money, right?
Wow. Yeah, I guess not.
Okay, well, your book,
Yeah.
Retire Securely, Insights on Money Management from award-winning financial columnist. Now, let's just give everybody a little background on you here. You started out on Wall Street as an attorney, developing your views on financial services. 25 years ago, you founded your own investment counsel firm, and you have an award-winning weekly investor education column. So that
I
means
do.
that
I
you
do.
probably know what you're talking about here, Julie. So let's get right into it. Why the love
All
for
right.
money? Why the love for money?
Now, what do you mean by that?
Meaning,
Explain
like,
that.
why is it so important for people to pay attention, and what started your passion in educating people about
Okay.
money?
Well, it was a long journey for me. Starting out as an attorney, I wrote prospectuses, and nobody liked to read prospectuses. Of course, they would fall asleep reading prospectuses, so I had to really understand what it was that I was writing, and I knew that I didn't know enough to invest on my own. And that's what really started my journey in learning. And it was driven by being on Wall Street, but also driven by a desire to really understand a very complex subject. So that's really what triggered me, what pushed me. And then as I developed knowledge, then I started wanting to share it. And so it's a journey. You cannot just start out day one and do a good job. It's an experiential project. There are things you learn that will teach you how to be a better investor. And I don't think it's a love of money. It's just that money is just the tool. And learning how to invest is something that is basic. We have to all do it now that people are living longer, and also because the pensions that used to be are not around anymore. So we have to learn how to invest our 401ks or 403bs and just invest on our own. It is just a function of today.
Right. And I guess I didn't when said love of money, I didn't mean like you were in love with money, meaning the subject of. That's what I meant. How
Yes,
did you
yes,
fall
yes.
in love
I
with
got
the
it.
idea of teaching people
Yes,
about money? So let's get right
yes,
down to it.
yes, yes, yes.
401ks and investment.
Yep.
There are many of us, like many of us in the entertainment industry, where there there is no 401k. Your companies,
Hmm.
because you move around from job to job, you might be in one city one year and then you get transferred to another city, or you got a job in another city, and it's hard when you're not with the same company. So how
Hmm.
do people who aren't necessarily with a company that has 401ks, how do people start planning for the future?
So part of the plan has to be looking inwardly and looking at yourself and not outwardly. So what I mean by that is that every single person has a certain lifestyle that they are living today and that they want to live in the future. And anyone who is currently working probably wants to retire someday, probably wants that as a goal for the
Right.
future, right?
Right, exactly.
So it's all about how is it going to happen. And I'll give you an exercise that I think is will help people start. And that is, so today's Tuesday. So if you were to think about retiring on this coming Monday, how would you pay for it? So that exercise takes you through the thinking process of, well, wait a minute, how much are my expenses? Where am I living? Do I want to live there? How will I pay for those expenses? Where's the money coming from? So it helps you start on that journey to understanding cash flow. And cash flow is really the foundation of any kind of secure retirement. And it's very interesting because when so I've been working with people who are approaching retirement and retirement for more than 25 years as I've been writing the column. And I work with high net worth individuals, so it's a rarefied sort of universe. And that's part of the reason why I write as well, because that gives me balance in my life. I can help the high net worth individuals, but at the same time, I can help the public with information and guidance. So what it takes is understanding how do you take today and work it into the future. And the younger you are, the more advantageous your situation is, because you have something called time diversification, or basically compounding on your side.
Mm-hmm.
So years and years of investing small amounts make huge differences in terms of what your outcome is. But so bottom line is, we have to know ourselves. We have to know how we want to live, how income comes in, how expenses go out, how money goes out. And then we really need to prepare today for tomorrow. Can't wait. And it's not that hard to do that if you know the essential elements of the equation. And those essential elements are: take advantage of compounding, take advantage of time. Don't waste it. You don't want to be in the position of waking up someday, say at 65, and saying, whoops, I wish I had started earlier.
Okay, so I'm going to ask two questions. The first is for someone just coming out of college. My son is just graduating in May from NYU. So for somebody at that age, them thinking about retiring and saving is they're like, wow, I got plenty of time. I'm only 21 years old or 22. And, I got plenty of time to think about that. So how do I get him to understand that it's necessary to put, even if it was just $1,000 a year away? And then how do I talk to somebody? The second part of that is, how do I talk to somebody who's over 65 who doesn't have that 401k, and they're wondering how, am I going to have to work till I'm 100? Or, how can I start doing something now?
All right. So your son is super easy, because it's a question of looking at some of the data. And by the way, I have the data in the book, so it's really super easy to find it. But the question that needs to be addressed with the son is that, just like every day when you get up and you brush your teeth, is part of life. Part of life is to make sure that you are preparing for the future. And the simplest, easiest way to prepare for the future, it's going to cost you much, much less if you start today than if you wait until you're 55 or 65 or 45 to start thinking about it. So you're losing by not starting. And that can be shown with numbers. And it can be shown with lots of historical numbers. And by the way, history helps us guide our decisions. And what I did in the first part of my book is I laid out different market periods so that people can face a bad market through writing rather than through experience. So your son is super easy. And by the way, I'm happy to help. Send me, anyone who's listening can send me an email, and I can address that in my column. And that's how how these columns get written.
Okay.
So please do that. Over 65, now you've got fewer options. But even at 65, you have to think ahead to the next 30 years, 20 years, 30 years. People are living longer. So you still have to grow your assets even after 65. But now you have a new issue. Now you have to pay for those expenses out of your own pocket. So how do you do that is also part of the equation. And that's what makes retirement investing so much more difficult than preparing for retirement, because preparing for retirement investing is pretty straightforward. It's investing for capital appreciation, which you can do through the stock market, through index funds, for example. Now, creating income after you retire, much more complicated. Where do you get the income from? If you put all your money in the bank, there's no income being generated in these low interest rate environments. So it's much more complex, and that's where you may need some help.
Okay, now let's talk about the person who might be over 45 or 50 who hasn't had a chance to build up anything, but, well, let's say maybe they own some real estate. What do they do?
Okay, so, all right, so again, you look inwardly and you say, okay, what do I own? What are my assets? And how do I put those assets to work? So the question is, if you own real estate, that might be something that you could either sell, liquidate, or put to work through creation of income. Now you've got an asset that can be something that will support you through retirement. So again, it depends on the situation. Someone who's 45 or 50 and hasn't started investing, they have to start right away. Because again, it's time diversification, time horizon that is the single thing that applies to everybody, no matter what their financial situation. Everyone has time on their side to invest. So no matter if you have multiple millions of dollars, hundreds of millions of dollars, billions of dollars, or $1,000, you have time. And by the way, there's another very important point here, and that is that when people are concerned about where the market is now, for example, the market is volatile. When people are concerned and they don't do something, big mistake, especially if they are younger, and by the way, 45 or 50 is young in the overall scheme of things.
Yeah, now it is. Yeah, people are living till 90 and 100.
Yeah, absolutely. So taking advantage of time works for people of that age as well, but you have to be in the market to be able to make money in the market. So you have to be in there. So you can't go to cash and then go back in and go to cash and go back in and expect to do anything, expect to move forward. So that's one of the tenets of becoming a successful investor, is to know that markets will be volatile. There are ways to take advantage, participate in the markets without taking on too much risk. Risk is very important to understand. Not that hard to get to the point where you do understand it. There are some key elements. And financial literacy has to start very, very early. And so the younger, the sooner, the better.
Now, looking at someone like my son and many other graduates in May that are coming out of college, what is the best advice to them with regard to paying off student loans? Because we've got, a hefty student loan that obviously my name is on part of, because they wouldn't give it to him alone. So that old Parent Plus loan is right in there. What's the best strategy for paying off those loans?
So again, you're going to hate me for this, but again, you have to look at the person.
Okay.
You have to look at the person and say, okay, well, what is there other debt? Is this person going to go out and buy a car? Are they going crazy over an apartment? So what does the overall financial picture look like? And then paying off student loans is important. You can't ignore that. There are ways to lessen that load by certain types of jobs do forgive. There are some forgiveness loans, ways to take on a position in a particular job that will forgive a portion of the loan or the entire loan. And I'm not an expert in that field, mm-hmm. but I am aware of that. But now investing has to be a priority no matter what your loans are. So you run two goals at the same time. One is debt, control debt, but investing has to occur at the same time. You can't wait until you pay off your loans. And the simple reason for that is that the markets will give you more than the loan payoff. In other words, you can do more, you can make more money through the financial markets if you invest wisely. Let me give you one more trick, and that is that when someone young coming out of school is not familiar with investing, there are ways to trigger interest by just showing leverage. So, you can get leverage by borrowing money, but you can also get leverage by time. And what I mean by that is I have market data that shows that someone who is in and out of the market for very short periods of time, and by the way, I can share that data, and some of it is in the book. You have volatility when you're investing for short periods of time, but over longer periods of time, holding periods, and now I'm getting a little technical,
Yeah.
the volatility dampens. So I can physically show your son a graph and some data underneath it that will, I think, convince him that he has to start today. Will you take up that challenge?
Absolutely.
So
Absolutely.
what you have to do is put your son together with me.
Okay. I will absolutely do that. Absolutely. He's already, stressed out about just graduating and what is he going to do in the next 6 months. And I'm like, it's okay. We can plan.
Yeah.
I'm going to help you plan ahead because it's really important to me that my kids understand how important planning is, because I wasn't afforded that same. I mean, my father was very good about always having a plan B, but the financial aspect of it always wasn't there with regard to investments. But your book, Retire Securely.
Well, you know what?
Go ahead.
Times have changed a little bit, so today it's essential.
Yes, it is.
To do the planning and to do the investment
And it's
planning.
wonderful to have people like you here. Your book, Retire Securely, Insights on Money Management, award-winning financial columnist Julie Jason. Thank you so much for being with us this morning. Now, how can people reach you? Where's the website so they can go if they have questions or they want to read your column or send you some information?
Yep. So it's super simple. It's juliejason.com, and it's Julie, Julie, Jason, JASON.com.
Very
good. I welcome people writing in and asking questions.
And what's the name of your column?
So the column appears under different names nationwide, and so you can also find it on. If you just Google Julie Jason, you'll locate the column. You'll locate the column. Yeah.
Of course.
Yeah.
It will.
And thank you for asking.
Oh, absolutely.
And it was fun talking to you.
And I will put my son in contact with you because right now he thinks he knows more than I do, so he might listen to you.
All right.
All right, Julie, thanks so
call.
much for being with us this morning. We appreciate your advice. Again, the book, Retire Securely. What a great gift this would be to give to a college graduate, to give to anybody. I'm so glad that I have it, and I'm going to share it with lots of people. She also wrote the Retirement Survival Guide. So what an amazing book, and she sounds like she's really very, very knowledgeable, and it sounds like I got some catching up to do. But hopefully my son and daughter and all the other young people out there listening in the audience might get some good advice. And I think we've got somebody else here on the phone. Greg's up with us on Skype. Hey, Greg. Good morning.
Hey, how are you doing?
Good. I'm glad to see you're another early bird like myself.
You know what? You cut my you cut my walk run a little early today.
Oh, well, don't you think it's worth it, Greg?
That it is. It is definitely worth it.
We both got kids at that age in their 20s, and we've got kids across a span here. Not we, but meaning we both have children. Let me clarify that real fast.
You mean me?
Yes, both of us have children. There we go. So, did you happen to hear some of the conversation with Julie?
Yes, I did. I sure did. And as a former financial advisor, everything she said is correct. There's some key words. They're not large words, but they're small words a lot of times that kind of define who the investor is. I know when we initially talked, I love when because everyone can try and be a successful investor, but even the greatest of investors lose money. This is one of those kind of careers where sometimes safe is better than sorry. When I was in the business, you kind of learn both sides of it and decide the avenues at which you want to become an investor. And a lot of that is based on how much you have to invest. But everything Julie said was truly correct. And the most important thing I think she said that hopefully everyone understood is the earlier you start, the better you are.
That's very true. But I know that there's a lot of people out in the audience who either, didn't have money, weren't aware, because financial literacy really, I think, just started coming into a place where people were paying a lot of attention to it. Unless you came from a really wealthy family, financial planning and literacy wasn't certainly not something that they're teaching in the school. So,
well, no, I don't think anybody's ever. I mean, the best they can teach you in school is how to budget your checking account.
Right.
That was what was called financial literacy. And financial literacy, and we still do the same thing. Of course, I have a foundation, Athletes for Life, and of course, you're a part of our summer program. We're both of us. The one thing we're trying to do is teach these young people how to prepare for the future. And of course, education is probably the most key component that we can talk to them about. But within getting the education comes making some what we call life skill decisions. And probably at the top of the list is going to be financial literacy, because all of them are going to work. All of them are going to pay taxes, and all of them are going to either spend, save, or, at some point invest, even though investing is spending. I mean, that's one of the probably things that I try and get across to kids, is that you have to look at what you invest as money spent. And if you do look at it as something that you spent, you won't keep just running back to it, because a lot of times people say it's savings.
Right.
If you're actually investing, you're putting that money to work, which means it's gone. And for these young minds, that's kind of an important thing, because when you tell a kid to save, he always knows I've got something in the kitty. When you tell them to invest, he's got to see it as being gone and gone to work for him. It's not his money anymore. And that's kind of what a mutual fund, a stock is. Those are in essence, your kitty, but that money's gone, and you got to allow it to work, and you just can't go back to it when you get in trouble. And that's probably the biggest thing that young minds, I know, dealing with my daughter and my son and different people, that's their biggest issue. You can tell them to save money, but when you tell them to save, they know, oh, you know what, it's a hard time this month. Let me go into my savings. Let me grab that money out and pay this bill. Right. Instead of letting that money, like she said, in and out of the market.
Right. So let's see. We've got a bunch of people here on Facebook, because we are live on Facebook right now. Thanks for getting up and being with us, Greg. Magda Walker, Lati, hi, Letty. Stephanie Darrensburg, Rochelle Sutgray, hi, honey. Christine Sampson, David Bryant, Glenda Clark Stone, Sue Land, Bernie Moody, Irma Romano, Sandra Castañeda, Tim Alexander, Anna Davalos, everybody here watching. I guess this is really incredible information that we have. We just had the author of the book Retire Securely, Insights on Money Management. She was on here in a few minutes. We are going to have another one up. She's going to be here. The 12-month Plan to Financial Freedom. The book is called Invested, How Warren Buffett and Charlie Munger Taught Me to Master My Mind, My Emotions, and My Money with a little help from my dad. Danielle Town is going to be on with us in a few minutes. So, Greg, what do you think is some of the biggest mistakes that people make in investing? Because I know I'm scared to death of the stock market. I like the real estate market for investing.
Well, I mean, you're you got to remember one thing. There are very few states like California, but they are special places in America that you can go and get real estate, that it will go up as well. But you got to find, they're harder deals to find. I tell people all the time, we were always taught that if you ever took a business class that actually gave you that 5 minutes worth of real estate, it said location, location, location. Right. And we just happened to be in a great location.
Right, the whole state.
Exactly. Right. Everything, I mean, even in the worst areas, the cyclical turnover within 10 years, what we knew, I remember when we go back 20 years. Think of where the home you had there above Baldwin Hills years ago, remember? Mm-hmm. Yep. And think of that neighborhood today. It's going through a complete revamping, and it's starting to look like the Baldwin Hills of the 50s and 40s. And so with that new stadium going in, with all the different changes that go around you, those things don't always happen in areas like, I hate to use this as a city, but like Flint, Michigan. It doesn't happen in Flint. Poor Flint. It doesn't happen in, Dayton, Ohio. But what you see, though, is that for a person that's young, like you were talking about, the one thing I've noticed about the young mind is they're a little bit more creative than we were as young people, because you got companies like Indiegogo or Starter Engine. These are cryptocurrency markets, or as they call it, are these blockchain markets that they give kids an opportunity, because of their mind really drives most of this millennial. It's not like us where hard work drove us. Right. Theirs is all intellectual. So now all of a sudden you have a chance today to go online and use this technology, as we're using it today, and you get a chance to invest in, say, like a Weber. There's a company called Weberly Lab that has this ear technology, and it's an actual translator in your ear. And they can put
Really?
$400. Yeah, Joseph is so creative for these young minds now. Back in my time, and I was fortunate. I'm truly fortunate because as a young kid coming up, we talk about NFL ball players and they talk about how they blow their money and how they do this.
Right.
But the one thing they never tell you about is that when you turn 55, you have a retirement. So a lot of these guys who struggle between the ages of 35 and 55, all of a sudden they get a retirement. And if you can wait till you're 65, and if your family is like mine, I got uncles that are almost 98, 100 years old.
Right.
It's like, maybe I'm going to get from 65 to 90. I might have some years there. Well, all of a sudden, the guy who in my NFL standpoint, goes from having a $5,000 a month to a $20,000 a month income, just waiting on his retirement. That's a form of growing of course, that's a pension. Right. But for a person who doesn't have a pension, I always tell people sometimes, security is safety. I know there's a lot of things, I'm going to give you a situation. Of course, a dear friend of mine, but he's in one of those situations where he's got catastrophic illness right now. Mm-hmm. And so he's got to deal with that financially, individually. But then even more important is that when you're young, you can take out insurance plans to give you equity in the future. A lot of people don't always love it, and some people won't tell you these words, but sometimes that's that unhidden word underneath the blanket called annuities or long-term care, or you're basically insuring your future. I tell people all the time, one of the smartest things I did when I went to Wachovia is that when I walked in there, I was looking at stuff that I could sell to other people, and I came across this thing called long-term care plan. And it seems expensive, but it's a form of saving, but I save for my health future. And so, here I am, I put $100. I put $100 to the side, but I'm now getting close to $20,000 a month if I come down with something catastrophic or something that causes me that won't allow me to work. That's kind of insurance for the future. Insurance has always been probably our biggest investment for the future. People invest in their health, they invest in their life, they invest in annuities for their growth of their money, because the one sound industry we've always had is in the insurance business. We saw it during the collapse. What was the one thing that our government would not allow to die? AIG. They would not allow that company to fail. Why? Because the insurance backs our whole world.
Right.
So my advice to a lot of the young kids that I come across is, sometimes think about that when you have it. A young kid who, for a lack of better words, can put $100 to a side in an annuity, the same as he could be putting that aside into a stock market. And believe it or not, by the ups and downs, and I'm not one of those persons that are going to tell you I've got statistical data to prove it to you right now, but I can tell you over the long term that I've looked and watched. Some markets have gone up, some markets have gone down. Insurance, an annuity has a steady climb. It never goes down, and it just climbs. And then when you wait and you're 25 years down the road, that $100 a month all of a sudden is going to pay you. And the amazing part about annuities is that you can borrow against an annuity. So, when you borrow anything, what don't you do? You don't get taxed on it. And right. So you can borrow it at the age of 65, you can borrow against it for the next maybe 30 years or 20 years, and that becomes your pension. So there are a lot of things that young minds can look into. I think the most important thing is what we said before, is education.
Yep,
Just like they have to study their books, they got to study about finances. It's not something that, let me say it this way. I'm not an expert at it. I've met very few people when I worked at Wachovia who were experts at anything. They were good at one thing or another, or, they had their niche market. Some guys were great at picking mutual funds. Some guys were actually good at picking stocks. Some guys were even greater at doing venture capital work, kind of what I was talking about earlier, going on to these crypto sites, these right. ICOs or OPOs. These sites are, like I said, it's a different mindset for this millennial crew. So they're going to do things that are more in their world. And for me, I look at these things, like I said, there are sites out there, Indiegogo, Start Engine. They look like GoFundMe pages where they're raising money on a daily basis. But what happens here is that company, you read their prospectus. Go ahead.
I'm going to interrupt you for 1 second because we've got our next author on. But please, I'd like you to stay on because I want to know more about these sites where, like you were talking about the little translator that goes in your ear. I'd love to know more about that and how that might be something and how we can tell which ones are good and which ones might be scams and how we can look at that. So if you'd hang around, we'd love to have you back. We're going to move over here to the next book. 12 Months to Financial Freedom. Invested is the book. How Warren Buffett, Charlie Munger taught me to master my mind, my emotions, and my money with a little help from her dad. Danielle Town is on the line with us. Good morning, Danielle.
Good morning. You were having an interesting conversation there.
I tell you, it's a whole hour of information on finances and financial planning because I just think this is so incredibly important for my audience. And so we've got lots of people. Dr. Betty Uribe has joined us. Roland Lee is watching. Brent Pasinger, everybody here hanging out. I tell you, I'm live on Facebook. We started at 5:30 this morning, and people were just coming in because this is such an important subject because in these times right now, it's crucial that people plan. So let's get right down to I love your book, by the way. It is amazing. My son's graduating from NYU next month. I'm giving this to he and all of his friends because it really is an incredible book that you have written. And talk to me about, so you used to be a corporate attorney, and now you've moved into this financial area. You're a motivational speaker and investor. So let's talk about that. Simple strategies for successful living in only 15 minutes a week. Payback time, making big money is the best revenge. All of this, Phil Town, all of this is there. But talk to me about why investing and financial literacy is so important, and let's hear some suggestions.
God, yeah. I mean, everybody who's listening and who's been on since 5:30 this morning is wondering what the heck to do with money because we do not have the education.
Right.
I mean, your previous guest was exactly right. We are not taught this stuff in school, and we don't know what to do. So I am the child of an investor. My dad, Phil Town, wrote those books that you just mentioned. He wrote Rule Number 1 and Payback Time, both of which were bestsellers. And now we've written a book together, Invested, which is currently a bestseller on the New York Times list, which is so exciting. And like you said, I actually went to NYU as well. I went to NYU for law school.
Yay,
I'm a lawyer.
NYU alum.
I loved it. Exactly. And I just had no interest in this stuff. They don't teach it to us. My dad kept on sort of talking to me around investing, but I'm not a numbers person. I'm a words person. I'm a lawyer. And so finally, it wasn't until I was working in a big law firm, I was tired, I was starting to get really burnt out, and I had made a little bit of money, and I had no clue what to do with it. And that's when I finally, out of pure desperation, and I did not want to do this, but I turned to my dad, and I said, what on earth am I supposed to do with money? I think I'll just save it. And he was like, save it? Are you insane? Inflation makes the value of your money just disappear without you doing anything. And once I figured out that we actually have to invest in order to just stay even because inflation reduces the buying power of our money year over year, that's when the light bulb went on. And I went, oh, my God, I have to do something.
So what were your first steps, and what suggestions can I give to my son as he, starts out? Because, when you're 21 years old, you believe that, life's going to go on forever and everything's going to be fine. Yes. And there's always another apple on the tree.
No, I mean, for me, the idea of retirement is not an enticing one, frankly. Like, I'm young. I'm looking forward to having a great career and doing interesting things. And the financial services industry feeds us this story about how we're supposed to be preparing for this long, far-off retirement. It's not something that feels very present. But what does feel present is freedom. Being able to choose what we want to do, maybe choose a job that pays a little less than the other job, maybe work part-time, maybe volunteer, maybe get to stay home with your kids if you have them. Like, just being able to have options and not worry about the bills. That's what I wanted. So my first tip to people, which really changed everything to me, is that I can just start where I am. I didn't have to have any special investing knowledge. It turns out that we all actually have a lot of opinions and a lot of knowledge about companies that are public right now. And it's okay not to know exactly what to do with that knowledge right away. So first thing is just accept where you are, realize that you didn't learn it, and it's okay not to know. And then realize that we actually know a lot about companies straight away. Like, for example, Apple, classic example. Probably we have an Apple or a Samsung or an Android phone in our hand.
Right.
We have opinions about those companies. That's a great place to start. I'm not saying you're going to eventually invest in those companies, but it's a great place to just start practicing. I see investing as a practice. It's about the journey for me. It's about learning. It's about discovering so much more about the world we live in through this lens of business, which I didn't realize at all before. And it's opened up so much cool information for me.
Now, you've in your book, Invested, a 12-month plan to financial freedom. How could this book work for somebody over 50 who is looking at themselves saying, oh, gosh, I own a little real estate, but I don't have that 401k. I don't have, I don't have a pension. I don't work in an industry where there's pensions. Yeah. What can I do? I'm this, this person who is over 50 and, like I said, owns some real estate, but never worked in an industry with a pension. How do I plan?
Totally.
Quickly.
There are so many people in that situation.
Right, there are.
Well, get the book because this book is for you. People like that, doing like low-cost index funds, which is what Buffett recommends for younger people, it's not going to get you there if you're over 50 and you don't have the nest egg. You've got to do something that's going to give you higher returns. And our book lays it out really clearly. Check out Chapter 2. We go through the numbers of what's going to happen if you get a standard market return. What's going to happen is you're going to run out of money very quickly within just a few years after retiring. It's really sobering. But if you can get 15% returns, which is what Buffett looks for, then you will see on the calculators that we have how that changes your life from running out of money to actually having millions as a retiree. It's extraordinary. There's a tipping point just from putting money in and from compounding that interest. And if you can get there, you're going to be fine.
Wonderful. Now, you've got people like me who are deathly afraid of the stock market, having lost a tremendous amount in the 90s when the market crashed. I've been, gun shy ever since. And my thing is, let me buy a piece of real estate because that I can see, I can touch, I can watch it grow. So how does somebody with that mindset or somebody who really doesn't know the stock market, how do you get them to move over?
Oh my gosh, you're me. Like, that was completely me. I was okay with buying real estate because I could see it, I could understand it, I knew the neighborhood, I had a pretty good guess about what was going to happen to that real estate in the future. I was comfortable with that. So my dad actually taught me this investing method through the lens of real estate. His perspective is that if you can understand, he calls it like, I bought a condo, so he says, if you can do condo, you can do this. And it's essentially the same exact principles as real estate. It's really extraordinary. Once I got this idea, it clicked. What we're doing with investing in public companies is the same as what you did by buying a house in a certain neighborhood, in a certain town that you understood. So first of all, we just make sure we're capable of understanding the business. This all comes from Charlie Munger, who's Warren Buffett's investing partner. We make sure we're capable of understanding the business by doing research. Then we make sure that that company has an intrinsic and durable competitive advantage, which is what we look for in a house in a neighborhood. We want to make sure that neighborhood isn't going to be overrun by falling prices or, something bad coming in. We want to make sure that neighborhood is going to do well in the future. Same thing with a company. Third, we got to have management who have talent and integrity. We want to make sure it's being run by good people. Again, same thing in a neighborhood. You want to have good neighbors. You want to understand the people around you. And then finally, you've got to buy it at a price that makes sense. You can't pay through the roof for this house, right? You got to make sure it's at a good price. And there are ways to do that we lay out very clearly in the book because that's the hardest part for me. And then finally, when it comes to a company, which is different than a house, I want to make sure I'm investing in a company that has a mission. I want to make sure it's a company that has values that I support, that's doing good things in the world, because my money is a vote. And I want to make sure I'm voting for great companies that have good policies towards their employees, that aren't polluting, that aren't hurting animals, that are having good corporate capitalism going on. And once I have those things, I feel like I can love a company and I can ethically and confidently put my money into that public company. And I get it. It's scary to put money in the market. I was terrified. So I practiced. And the practice and the knowledge and the information and starting to understand what's happening makes all the difference to that fear.
What are some safe, like if for a scary person? Because I know I've got lots of people here that are on. We're live on Facebook right now as well. And Cinda Williams, good morning, Cinda. She's saying that's why I'll never retire. I'll be working forever. Yeah, because we both are in industries where there weren't pensions. So how do you convince someone that's over 50 that taking some of that money and putting it into the stock market or into companies? And what do you think about this new idea of looking on Indiegogo, where you see some of these companies with these amazing ideas and things that, could blow up into huge things? How do you know and what to look at and get us to move over in that direction?
It's such a good question, Cinda. I mean, this is something my dad and I talk about all the time on our podcast. We have a podcast called the Invested Podcast. And we go through this stuff because I have the exact same question. I want to invest in the latest cool company. I want to invest in startups. I'm actually a startup and venture capital attorney. That's my practice area. I love these new companies trying to change the world. However, for those of us who are afraid of these things, we have to choose companies that have really good track records, that have those principles from Charlie Munger that I just mentioned, that protect them from competition. New companies may have that, but it's hard to know what's going on with them. It's hard to know what's going to happen when they're disrupting an industry. Who's really going to come out the winner? I mean, I look back to like the dot-com boom when everybody was freaking out about all these new companies in the computer space, and Netscape was the browser we all used. Well, does anybody use Netscape anymore?
Right,
no.
Right.
Look back to the beginning of social media. Friendster. We all used Friendster. Does anybody use Friendster anymore?
Right.
Besides Justin Timberlake? No. So we all see these things, and it's really exciting, but we don't know who's going to win. And it takes confidence and certainty, Warren Buffett says, in order to actually put your money into a company. So what we do, what I've been taught, is we only choose companies that have 10 years of great financials looking backwards. Now, backward-looking information is no guarantee of future success, but once you understand the company, you can make a good, educated, confident guess on whether or not that's a good steward of your money going forward. So, Cinda, if you can find some great companies that have really good track records that you think are going to continue that in the future, you will be able to retire, because those companies, if you buy them at the right price, will return enough for you to get to that point of financial freedom.
Well, I know our time is almost up with you, but before we get out of here, I want you to give 4 pieces of advice for anyone trying to secure their financial future, and then please give us information on how we can follow you, listen to your podcasts, or any other way that we can follow you on social media.
Okay. 1, make sure you're capable of understanding the business. You do that through research, through reading, and through becoming more confident in your own knowledge. And this really only takes about 15 minutes a day. That's what I do. I read the Wall Street Journal, I check out the news, and I make sure I just know what's happening with the companies I'm interested in. 2, make sure that company has a moat, just like a moat around a castle. And the way that you do that is you look at the numbers and you make sure you understand what would happen if a new company came into that space and tried to attack your company. Would it win? 3, we want to make sure we have management with talent and integrity. We want to make sure we have good people running this company that we trust. And again, the internet is the way to do that. We have so much good information out there. 4, we buy it at a price that makes sense. And this is straight from Warren Buffett and Charlie Munger. You buy it at a low price with a margin of safety, and you will be protected from the market going up and down. Finally, you can check out all this information, get more, understand the details behind this, deal with your fear. I'm all about dealing with our fear, being afraid of investing. I mean, I get it. It's scary. And you can find all that stuff at danielletown.com, which is my website, or at rule1investing.com, which is my dad's site.
Or with the book. With the book, Invested.
Exactly. And you can find the ways to buy that book on danielletown.com. It's on Amazon. We are a New York Times bestseller this week, which is so exciting, straight out of the gate. So thank you to everybody who's been buying the book. And I'm on social media as well, Instagram, Danielle Town.
Wonderful. Well, thank you so much for being with us. We have just had an amazing conversation with you. And again, the book is Invested, How Warren Buffett and Charlie Munger Taught Me to Master My Mind, My Emotions, and My Money, with a little help from my dad. Her dad is Phil Town, the New York Times bestselling author of Rule Number 1. The whole morning has been about money and investments and how to plan, how to look forward. My son, as everybody knows, because you guys have watched him grow up with me online and over on the radio stations that I've been on, and my daughter out there as well, blazing the trail and with her production company. So it's time to kind of, I've always talked to them about investing and moving forward and how to plan for the future, because of the industry that I chose, there aren't pensions. And 401ks, you're moving from company to company. These things just don't happen. And so my money was put into real estate and not necessarily 401ks or things like that. So I'm hoping that I can get them to understand the need to start doing that now, because Mama's probably going to be working until she's about 80. To try to keep it going. So let's see. We've got to say hello to lots of people here. We're live on Facebook. George Clark, Virgil Woolfolk, Art Gomez. Good morning, Art. Dr. Betty Uribe here. She says, listen to 11 essential invested podcast episodes. Podcasts are also in Spanish. Fee King on there. She says she's got an appointment. She's got to listen to it all later. But Fee, I tell you, we've been here all hour talking. We've had incredible authors on this morning. Retire Securely, Insights on Money Management. That was our first author, Julie Jason. She's an award-winning financial columnist. She was on, and we just got done talking to Danielle Town, author of Invested, a 12-month plan to financial freedom. So let's go to the phone lines here and see who we have on the phone. We've got Greg Bell is back with us. Good morning, Greg.
Good morning.
So did you happen to hear what Danielle had to say?
Of course. I mean, you said it before. She's got an award-winning financial dad.
Right.
She was one of the very fortunate. She was one of the very fortunate. Definitely had an opportunity to listen. And like I said, it's all about education. That's probably the number one thing that everybody's going to say to you on the phone. You just got to learn, and how you go about learning is what's important.
Okay, I think we've got another caller here, too, who wants to join in. Joseph Meyer, good morning. Joseph, good morning.
Good morning. How are you?
I'm good. Joseph, did you happen to have a chance to listen in on any of these conversations so far?
No, I didn't.
You didn't? Okay, but I understand that you have a tremendous amount of information and advice, 50 years of investment and information about financial freedom. Give me your 5 best tips on for somebody over 50 on getting some financial elbow room.
Well, I think number one, you want to protect your capital. You certainly don't want to take risk beyond what you should be doing. And I think you want to buy the quality. You want to buy it when it's under-owned, undervalued, and misunderstood. And you want to put in place a long-term plan and know you've got years on your side in which to accomplish your goals.
Okay, well, if you're 50 years old, do you've got some years because people are living well into their 80s now. What
Yes,
kind
they
of
are.
money do you need to put away? And Greg, if you want to jump in with a quick suggestion as well, what kind of money would I need to put away at 50 to start planning and have a little more security at 80?
Well, I think it's important that you put away as much as you can safely and put it away prudently and put it away consistently. I think we're all going to need, as we get older, more money than we think we're going to need at the time we begin our retirement and savings plan. And I think the markets will continue to do well over the long term, although I think in the short term the market is overvalued. And I think I wouldn't put any new money to work until we get the long overdue correction in the equity market.
So you long overdue correction. What do you mean
Yes.
by that? What are we talking about? Are we talking about another dip or another crash?
Well, the market, as you know, has gone up 34% since Election Day, and we've basically had less than a 10% correction from these price levels. So I do think a longer, more deeper correction is overdue. It's not a question of if, it's a question of when it settles into the marketplace.
Wow. And do you see that that correction? I like how you call it a correction. The correction, is it coming soon?
I think it could start any time for a variety of reasons. As you know, we got a falling U.S. dollar. We've got rising interest rates. We've got massive retail store closings. And now we're looking at the potential for sanctions and trade issues with China. So I think there's a lot of things here that could start this market down at any time for any reason.
Wow, it sounds kind of a little bit, I'm not going to say frightening. I'll just say a little scary. So what are some of the key things to look for to know that the market might be taking a dip, and how does one protect their investment?
Well, I think on any further strength we get in the equity market, you want to raise some cash, reduce your exposure, and move to the sidelines. There's nothing in investing through the many years I've been in the market that states you have to be invested 100% of the time. I think there's a time to be in a market, and I think there's a time to be out of it, and this could very well be one of those times.
Now, I've got a good friend here who's been in the financial mortgage industry for years, Diana Bryson Dykes here. She says you need to budget on how to spend money, not to spend. Must have principal-protected IRAs. And Dr. Betty Uribe jumped in and said, good point. Get a good financial wealth manager. Planning and discipline are key, regardless of the market. So let's
Very
talk about
important.
let's talk a little bit about what a principal-protected IRAs are.
Well, you want to protect certainly the money you put away for retirement, not take risk beyond, as I said earlier, you should be doing. I think most people in retirement accounts, quite frankly, have too short of a horizon, and they look for short-term performance and ignore the long-term potential of the underlying equity or underlying sector of the market that they're invested in. And serious money has always been made in the markets as long as I have been part of them over the long term. I think people lose sight of that.
So long term, the long
Very
yards.
important.
That's what we're looking at. Greg, are you still there?
I'm still here.
Greg Bell. Greg, you had talked about these small companies, these startup companies that are out there. I know who was it that just sold their company for $1 billion? Oh gosh.
There are a lot of them.
Yeah,
I mean,
these little small companies, and then they turn around and are sold for $1 billion.
Uh-huh.
Talk to me about some of these companies.
Well, everybody that's come on, it's like I said, it always comes back to the underlining is education. And the issue, I mean, one of your speakers was on a few minutes ago, talked about, being able to invest in those companies that we know. But guess what? How many of us wish we could have invested in Facebook?
Well, I don't know. We'll see today. We'll see what happens after he gets up there on the hearings that he has to talk
I
to.
got a friend who invested. I got a friend who invested in Facebook,
and
he's a billionaire. He's a billionaire now.
Okay.
And his money ain't going nowhere.
Right.
Whatever happens to Facebook, that's on them. He was one of the founders of Cisco Systems. you see what I'm saying? We all want to be a part of that company when it comes out in their initial public offering, and we never get the opportunity to know those things. So, when I start talking about these crypto companies and things of that nature, that's not my kind of investment because I don't know that area. I'm not a tech whiz, so I can't invest in something I don't know. But those kids today that are understanding that industry, you can't talk to somebody who's, Warren Buffett probably invest in more crypto companies than he'll ever tell us. I can remember the day when I found out that Warren Buffett was investing in what was at that time like a death insurance. That's basically the street name of it. He was investing in when people would be dying. And his company made billions because they were buying these life insurance policies that people who wanted to get out of them because they were going to time out or age out. So his company invested in buying those insurances at a lower cost. And when the person died, they got the benefit of the insurance. There's all kind of investments. It's about really just knowledge. And I tell people this more than I'll tell anyone because I was a part of that, the negative side of it. It's about finding somebody you can trust. It's not about finding some great company that's going to do some great thing for you because think of every great brokerage. They all got damage insurance, basically, and they've all been sued because they did shady things. I got swindled out of about $1 million from Prudential. And if you know today, Prudential's back in the marketplace because they have insurance to take care of things like that. Prudential's lost millions of dollars in lawsuits. But you don't hear about those things. It's about finding that person who you can trust that's going to follow the plan that y'all put together. And like the gentleman who just talked about, this market recovery, those are great terms. And he knows nobody has that crystal ball. You just got to find that niche that you're secure in, that you understand, saving money. Like when you say the money not being in the market, basically he's saying pull it out of the market, putting it into some government back. It might be a municipality bond. I don't know. I didn't hear anybody talk about bonds and treasuries because they're low right now. And that's something that I did a lot of 20 years ago.
Right, I remember.
My customer, we laugh about it. I used to make my investors 10, 12%. Now I'm making them 2, 3%. But those years that I was making them 15 and 16%, they're just kind of, it's leveling off now. But the thing about it that's nice is that when I see my clients, they smile at me because they never lost a dime. And that's really one of the things that a lot of people don't talk about. You're going to lose money. Plan on it. It's unfortunate, but no stock market is ever going to tell you they're going to guarantee you money. That's investing. Investing, you got to be prepared to lose money as much as you're excited to make money.
So I'm going to ask you both for five key things to do when looking for, well, I'll just say three key things to do when looking for a financial advisor. How do you know what to look for? Who wants to go first?
I'll let him go first.
You're going to think on that one, huh?
We both are going to sit here. I mean, I'll start this one because unfortunately, I've had the good and I've had the bad.
Okay.
The one thing that I tell the guys that I've worked with, and I still have a few clients, even though I'm no longer in the business, but I still give them some advice here and there. But they got to find, number one is you got to find somebody who and who you got to get to know them and know that they're a trustworthy person. Because just because I put a badge on my shirt that says I'm from Bank of America doesn't mean I'm a trustworthy person. It just means the Bank of America hired me. You got to find somebody who's going to listen to you and not tell you what you need to do with your money. They got to listen to know what you're trying to do with your life. So you got to see if they're a good listener as well as somebody who understands the market as well. And the safest thing you could probably say is you got to know their story. I can't tell you what the 3 or 5 things to pick a broker because I'll be honest, I know guys who are great at what they do. They take a lot of risks. They've lost a lot of money, and it can be a little shady some days. I just tell you, it's like any other. It's like, how do you find the best agent for an athlete or a best agent for a radio broadcaster? You know what I'm saying? You know the pros and the cons on all of them. They're going to do what it takes to make a commission and to make a living themselves too. Remember, they only make a living when they're investing your money, not whether you make money or lose money. It's investing your money is what gets them paid.
Okay. I know we've got some other advice in here. Joseph?
Well, I think you want to look at someone's experience. How long have they been in the market? How many bull and bear markets have they been part of? I think you also want to look at somebody's honesty and integrity, and you want to look at their ability to listen and certainly do what's in your best interest to help you build for the future and build for the future safely. Everybody's situation is different. The market will always represent risk, but it will always represent reward. And the key is, how do you participate in the market and understand the risk that you're undertaking with your hard-earned money? Those are the keys.
Yeah, some scary thoughts. Investing, how do we plan for our financial future? How do we make sure that our children, we've got something to pass on to our children? And all of these things. I mean, we could probably do 10 hours on this subject, and I hope to come back at least once a month live here on Facebook with this subject, because I think it's key, and I know that it's something that I'm thinking greatly about now, because it wasn't something that was necessarily taught to me. My father was very frugal and had real estate investments, so that's what I grew up believing in were real estate investments. But there's a whole nother world out there, new things opening up, and with social media and the internet being what it is, we definitely have the opportunity to probably research a little bit more and see about a company, about a person, to find out more things about someone, to know, because nowadays if somebody does something wrong to you, bam, it's up on social media within seconds of it happening. But then you got to filter through all of that too. What's real? What's just a disgruntled girlfriend or boyfriend mad, over a relationship instead of this person's actual integrity. So you've got to kind of weed through all of that as well, because as good as the internet is, I think that it can also be used to harm people and harm companies. So I think the key thing here is to make sure to keep yourself knowledgeable, to continue to educate yourself, to find one thing that definitely has rang true through all of our conversations with the authors and Greg and Jeremy here. You've got to really think about what you're looking for in your future. How do you want to live? What do you need to live on? What you need to live on right now? Like right now, I'm helping my son, my daughter. I've got lots of little things I have to do. I'm hoping to not have to do that when I'm 65 or 70 or 75. I'm hoping by then it'll just be kind of like, hey, what does Josefa want to do? And so you want to try to look at what does that mean? What does it mean to take care of Josefa at 70 years old? How do I want to live? Do I want to travel? What's my budget going to be? Like Diana Bryson Dykes here said, you've got to have an idea of what your budget is going to be. Is your house going to be paid off? Are you going to move to something smaller and keep that and rent it out? These are, all things that you've got to try to strategize for. And Greg, what's your best advice on that? Oh, okay. I guess they're gone. Greg is gone. We still have Joseph. Are you still here?
I am here.
Okay. What's your advice on what I just said about how to really kind of look ahead to see if you're over 50 right now, what your life's going to look like at 70?
Well, I think first of all, you got to understand how much risk am I really taking with my hard-earned money, with the investments I currently have in the marketplace. Do I really understand the risk that I'm taking in the hopes of making serious money that will allow me to retire? The rarest commodity on Wall Street is patience. Patience is the rarest commodity, right? Because most people go in the market and they lack patience to let the market do what it does best. And that is simply reprice asset classes. We lose sight of that fact.
So in closing, I would love to have somewhere where people could go to speak with you, to get some advice, maybe just have a conversation, and then we would sure love to have you back again with us. Like I said, I think that this is such a crucial topic right now. The market is so volatile in many directions, from real estate to investments, to try to help educate people on like what are IRAs, what are 401ks, what is that plan that you can put aside money for kids for their college fund. So give us a website where we can go for more information about you.
Well, I have a sample newsletter on the website. It's called straightmoneyanalysis.com. It's a quarterly newsletter. You can download the sample newsletter. It's a full issue of the newsletter. Runs typically about 25 to 30 pages. It covers the stock and bond markets, gold and silver, crude oil, natural gas, and Fed monetary policy, and it tells you exactly what you need to know, why you need to know it, and lastly, and very importantly, what you can and should be doing about it.
Very good. Again, that website?
straightmoneyanalysis.com.
straightmoneyanalysis.com. And Joseph,
yes.
Can we invite you back to have
Absolutely.
a conversation? I'd love to do this once a month.
I'd love to do it.
Very, very good. Well, thank you so much for being with us again. And the audience out there, thanks everybody. And people always tell me, why are you up so early? Having these conversations live on Facebook. And number one, I like to have conversations when there's something to say, not just to tell you that I'm having coffee. But again, the books that I had on today, Invested, a 12-month plan to financial freedom, Danielle Town, her father, Phil Town, a very, very well-known investor and author. She wrote that book, The 12-Month Plan to Financial Freedom, How Warren Buffett, Charlie Munger, Taught Me to Master My Mind, My Emotions, and My Money, with a little help from my dad. And then also Julie Jason, insights on her book is Retire Securely, Insights on Money Management, award-winning financial columnist. She has a column up, and juliejason.com is her website. DanielleTown.com is Danielle's. And again, I would really, really like to come once a month and have this conversation, because I think it's so important. I hear the stress in my son's voice as he's getting ready to graduate next month. And he's, so worried about, what is he going to do now? Because he knows that mom kind of helping out with things is about to come to an end, and he's going to have to, do what he does. And that's hopefully what the degree from NYU will get him. But it's kind of a scary time. And I know that he's looking forward to his future. My daughter and all the kids I call my kids are all looking to their futures. And I want to try to give them the best advice possible. My dad did the best job he could. And his thing was teaching me about, buying into getting real estate and holding on to real estate, that was, in his mind, the key to some stability later in life. And it certainly worked for him to be able to pass something on to us when he passed. So that strategy worked, but I think there's some other strategies out there. We heard from Greg Bell and Joseph, who gave great information. And that's what I want to continue to do at least once a month. Come on here, bring some great authors, some great people who can give us some advice and really help everybody understand, because times are tough, but we can get through them together with education. So thanks so much for hanging out with me this morning. Again, let's see, Dr. Betty Uribe gave us straightmoneyanalysis.com. That is Joseph's website. And a last piece of advice from Dr. Betty Uribe. She says, save a minimum of 20% of your income and invest. This can be done with discipline. And Diana Bryson says, stop paying someone else's mortgage. Buy a house. That's very true. Think about when you're renting, you're actually paying somebody else's mortgage. You're securing their future. So maybe you don't get the great big huge house you want. Maybe it's something small that you start with. And then, when you can move, you go ahead and rent that out and then move up to the next house that you want. These are kinds of strategies and things that you can do. All right, Dr. Betty Uribe, thank you so much for being with us today. Ivan Moody, James Rodriguez. Hey, James, how are you? Out there, lots of people. David Bryant, Ana Melendez here, Cecilia Quiones, Art Gomez, all of the people who came and were on today. Thank you so much. Spread the word. The good thing about Facebook is that this will be up, that you can go back and have other people listen to these incredible authors that we had on today, and make sure that you know that my key and my goal here is to make sure that you stay educated, informed, so that you can move forward in life on many different levels. Financially is one of the biggest ones, so I'm going to try to come back once a month and at least do something financial once a month. Thanks for being with me today. You guys have an amazing day. God bless.